Have you ever wondered about the future of the US dollar and its implications for precious metals like silver and gold? Will the US dollar continue to decline in value? And if so, what does this mean for the prices of silver and gold? Welcome back to our channel. Today we would explore the relationship between the US dollar, silver, and gold. The US dollar holds a significant position in the global economy, serving as the world's reserve currency and playing a crucial role in international trade and financial transactions. Recent trends and factors influencing the value of the US dollar. As we examine the current state of the US dollar, we need to consider the factors that have influenced its value. We'll analyze recent trends, including exchange rates and market dynamics, that have impacted the performance of the US dollar. A declining US dollar can have wide-ranging implications for the global financial landscape. We'll explore the potential consequences, such as shifts in trade balances, adjustments in international investment flows, and the overall stability of the global monetary system. Understanding these potential impacts is crucial to grasp the broader context of the US dollar's future trajectory. By establishing the significance of the US dollar and providing an overview of its current state, we lay the foundation for our exploration of its potential impact on silver and gold. Factors contributing to the potential decline of the US dollar. The US dollar's value is significantly influenced by monetary policy decisions made by the Federal Reserve. Through actions such as adjusting interest rates and implementing quantitative easing measures, the central bank can impact the supply of money and the cost of borrowing. Lowering interest rates and expanding the money supply can potentially weaken the US dollar by making it less attractive for foreign investors. This can lead to a decline in demand for the currency and subsequently lower its value relative to other currencies. Furthermore, the Federal Reserve's stance on monetary policy can affect market expectations. Any hints of accommodative monetary policy, signaling potential future interest rate cuts or additional stimulus measures, can put downward pressure on the US dollar. Investors anticipate that looser monetary policy may erode the currency's value over time, leading to selling pressure. Examination of fiscal policy measures and their impact on the value of the US dollar. Fiscal policy measures, which include government spending, taxation, and budget deficits, can also influence the value of the US dollar. Expansionary fiscal policies, such as increased government spending or tax cuts, can boost economic growth but may also lead to larger budget deficits. This, in turn, can raise concerns about the sustainability of the government's debt and put downward pressure on the US dollar. Investors may become wary of holding a currency associated with growing levels of debt and fiscal imbalances. Additionally, trade policies and geopolitical events can interact with fiscal policies to shape the US dollar's value. Tariffs or other protectionist measures can impact trade balances and investor sentiment, affecting the currency's strength. Political instability or tensions between nations can also lead to shifts in capital flows, potentially impacting the US dollar's value. Discussion of economic indicators and their relationship to the US dollar's performance. Economic indicators provide insights into the overall health and performance of an economy, which can influence the value of the US dollar. Indicators such as gross domestic product, GDP, growth, inflation rates, employment figures, and trade balances can impact investor confidence and expectations. Strong economic performance, characterized by robust growth, low inflation, and low unemployment, is generally associated with a stronger currency. Conversely, weak economic indicators can put downward pressure on the US dollar as investors seek more stable investment opportunities elsewhere. It's important to note that economic indicators do not operate in isolation. Their interpretation and impact on the US dollar's value depend on various factors, including market sentiment, global economic conditions, and the relative performance of other currencies. Changes in economic indicators can signal shifts in market expectations and influence currency valuations. By analyzing the effects of monetary policy decisions, fiscal policy measures, and economic indicators, we can gain a deeper understanding of the potential drivers behind the US dollar's potential decline. US dollar's value and its impact on silver and gold. Over time, there has been an inverse relationship between the US dollar and precious metals like silver and gold. When the US dollar weakens, precious metals tend to rise in value. This relationship is primarily due to the perception that precious metals serve as a store of value and a hedge against currency depreciation. As the US dollar declines, investors often seek alternative assets to protect their wealth, turning to silver and gold as reliable options. Historical instances where a declining US dollar led to increased demand and higher prices for silver and gold. History provides us with numerous examples of a declining US dollar leading to increased demand and higher prices for silver and gold. During periods of economic uncertainty, such as financial crises or geopolitical tensions, investors often flock to safe haven assets, including precious metals. As the US dollar weakens in such circumstances, silver and gold tend to experience upward price movements. For instance, in the aftermath of the 2008 financial crisis, as the US dollar depreciated, silver and gold saw significant price increases. Similarly, during times of high inflation, when the purchasing power of the US dollar erodes, investors seek protection in precious metals. In the 1970s, a period marked by soaring inflation rates, silver and gold experienced substantial price surges. It is important to note that while a declining US dollar can contribute to increased demand and higher prices for silver and gold, other factors such as supply and demand dynamics, market sentiment, and global economic conditions also influence their prices. Precious metals are subject to their own market forces, and it is essential to consider these factors when assessing their potential performance in relation to the US dollar. The implications of a declining US dollar on silver and gold. Silver and gold have long been recognized as alternative stores of value. Unlike fiat currencies, which are susceptible to inflation and economic uncertainties, precious metals have a history of retaining their worth over time. When the US dollar weakens, investors often turn to silver and gold as a means to preserve their wealth and hedge against currency depreciation. The intrinsic value and scarcity of these metals contribute to their perception as reliable stores of value. A declining US dollar can increase the attractiveness of silver and gold as inflation hedges. When inflation rises, the purchasing power of fiat currencies diminishes. However, precious metals like silver and gold are seen as tangible assets that can retain their value during inflationary periods. As the US dollar weakens, the likelihood of inflationary pressures increases, making silver and gold more appealing to investors seeking to safeguard their wealth against the erosion caused by rising prices. Additionally, a weaker US dollar can lead to higher import costs, including commodities such as oil and raw materials. These increased costs can further fuel inflationary pressures, making silver and gold attractive as a hedge against such economic conditions. The potential impact on the demand and pricing of silver and gold in the global market. A declining US dollar can potentially impact the demand and pricing of silver and gold in the global market. As the US dollar weakens, international investors may shift their focus to alternative assets, including precious metals. This increased demand can drive up the prices of silver and gold. Moreover, a weaker US dollar can enhance the competitiveness of exports from countries where silver and gold mining and production are significant industries. This can contribute to increased supply in the global market, potentially balancing the effect of increased demand on pricing. It's important to note that other factors, such as global economic conditions, investor sentiment, and geopolitical events, also influence the demand and pricing of silver and gold. However, a declining US dollar can act as a catalyst, reinforcing the attractiveness of these precious metals as investment options. Factors that may influence the relationship between the US dollar and silver and gold. While the relationship between the US dollar and silver and gold is significant, it is essential to consider other factors that can influence the value of these precious metals. Market sentiment plays a crucial role, as investor confidence and risk appetite can impact the demand for silver and gold. Additionally, global economic conditions, including GDP growth, trade dynamics, and interest rate differentials, can also affect the performance of precious metals. How geopolitical events and monetary policies of other countries can also impact the precious metals market. Geopolitical events have the potential to create volatility in financial markets, including the precious metals market. Political tensions, conflicts, or economic sanctions can disrupt global trade and investor sentiment, leading to fluctuations in the demand and pricing of silver and gold. Moreover, the monetary policies of other countries can influence the relative attractiveness of precious metals. Actions taken by central banks in major economies, such as interest rate adjustments or quantitative easing measures, can impact global liquidity and investor preferences for silver and gold. It is important to monitor these factors alongside the relationship between the US dollar and silver and gold to gain a comprehensive understanding of the precious metals market. The interplay between various economic, geopolitical, and monetary factors can shape the demand, supply, and pricing dynamics of silver and gold. The future direction of the US dollar holds implications for silver and gold. A potential decline in the US dollar can increase the attractiveness of precious metals as alternative stores of value and inflation hedges. Historical instances have shown that a weakening US dollar often leads to increased demand and higher prices for silver and gold. However, it is important to consider other factors such as market sentiment, global economic conditions, geopolitical events, and the monetary policies of other countries that can influence the precious metals market. By staying informed and monitoring these factors, investors can navigate the relationship between the US dollar and silver and gold more effectively. How do you see the future of the US dollar? What are your predictions for silver and gold in light of a potential decline in the US dollar? If you have any queries, please share your thoughts in the comments section below. If you enjoyed this video, don't forget to like and subscribe to our channel for more informative content. Thank you for